was that for volume? Is that okay?
I have been tracking my trades since you first asked us to do it about 2 weeks or a
Yes.
week and a half ago. Okay.
Yes.
So I have this file of all my trades. Excuse me. They're all BTC USDT perp.
A little loud,
They are
right?
all on 50x bar one, and I am
Okay.
up to trading 2 Bitcoin in each trade with that. So about
Okay.
just under $300, all right?
Okay.
Because I was doing small amounts of money, but I wasn't caring enough. So now it means something to me, because that's that kind of money feels something to me. And so it just gets me a bit sharper, I think. So
That's something that a lot of people face, is they feel like the amount of money isn't enough for them. So this is something that Pat had faced back in the day. Not the Pat in the chat, but a different Pat. This is actually one of our okay, it doesn't matter who actually. It's one of the moderators, family member, and he's a really good guy. And so was the moderator, but he felt that it wasn't enough capital for him to care. So he kind of had a disconnect and a disassociation with the trades just due to the amount of capital, because he felt like he wasn't winning enough, he wasn't losing enough to make an impact. And for some people, they do feel this. Excuse me, sorry, I had to mute to cough. For some people, they do feel this, and I understand. I get that, and I do agree with it to a point where it's like, okay, there's not enough money on the line for you to care. It makes sense, but at the same point, you kind of get into this spiral. So I just want people to be aware of that when you start to scale up your money, you better be ready, because if you feel like it's not worth it, I agree to a point that it does have kind of a diminished feeling of value. But if you scale up and you're not ready, it becomes a pretty bad cyclone where you lose money, it hurts, and you're doing things wrong, and it creates those bad emotional cues. I think everybody's been following along, emotional versus logic, and the mind work that I've been doing with that. Be careful of that, because while I do agree that a smaller amount of money, it can not feel as gratifying, and imagine back here trading Bitcoin at 6,000, and we're here today and Bitcoin is 60,000. Like, there's always going to be opportunity in the markets. If Bitcoin's going to fall down to the ground again, it's going to shoot right back up, or it's going to spike past the 60K range and go all the way up to 100K, and then it's going to drop down. Like, there's always going to be short and long opportunities everywhere in these markets. So don't feel like, oh, I'm gonna, like, that's what people thought back in the day. Like, oh, I missed Bitcoin. It was 6,800. People thought it would never reach 20K again. And again, here we are. Like, imagine that, right? Imagine it drops now back down to 20K before going up to 100K, or whatever path Bitcoin takes. Careful with that emotional versus logical trail.
Makes sense.
These are my
Trade
trades.
small,
What you
percentage,
see
not dollars.
is,
Exactly. Yeah, percentage, but not dollars. 100% agree, because dollars are scalable. Percentage is accuracy. Your percentage, how much percentage you make, is an accuracy of how good of a trader you are. Dollars is scalable. It means nothing. $1, $100, $1,000 has no effect other than the ending balance based on your own accuracy.
if it's a plus, it's the start of a long. If it's a minus, it's the start of a short.
So we just see your Bitcoin chart right now, and that's
oh, sorry, right, okay.
No,
I'm showing the wrong thing then. I'm showing the wrong thing.
You have, looks like just a window share, maybe not a screen share, or maybe you're on a different monitor.
No, I've only got one screen.
That's common,
I'm
Seabass.
not at home.
Found that with smaller amounts, you're taking higher risk positions. That's common.
We could also use your Binance order book if you'd like.
Yeah. Okay, we can do that.
That would be a little more intuitive, I think. So, yep, go to Binance there. That way I can see.
This is my trade history. Yeah.
What I want to see is not the trade history. What I want to see is the order history.
Order history. Okay.
Yes.
Okay.
So we're going to pick a random spot that was filled. So I'm going to let you just stop your cursor anywhere on the screen, and then we'll pick a random one that was filled. Oh, perfect. That's a good one. So that was filled at 73.21, and we're looking at 0409. So we're looking at April 9th at 15.28. So if you go on your
15.28 and go back to that.
No, you can actually stay right on Binance. That's fine.
Oh, I'll do it here.
Yeah. Let's find it there. So let's go and look in the past for 0409, because we're on the 11th right now. So yep, just keep going back there.
I'm on the 1 minute. Hang on. Make this a bit easier.
A 15-minute might be good for this example, just so we can get a little
Sure.
more information.
Sure.
It's only 2 days ago, so it's
Right.
not so bad
Right.
here.
So we are looking at the 9th. So it's some well over here. The 9th, and it was, what time was it at?
You have 14:21, and you have a short at
15:28.
Okay, we're using
15:28.
Right, 15:28.
15:28. So
So
it was
you would
in
have had a
around
short
there.
in this range. Talk us through what you did here.
What I've been doing is, so I would chart, and I redo my chart every day so that I get a meta feel for it and walk my way right down to the minute.
I'm going to be
From the
responding to
weekly,
chat
and
while
then
I let
I
this play
go-
because I want to
would've,
save time today and get
'cause I
through
know I
lots
did
of
this all
content.
week.
Like, I'm
only
pretty anxious to
entered
get to Butterfly
on
too
1
with you
minute
guys, so
swing
I don't want to
entries,
stop the
either
video
on
and
longs or
take
shorts.
too long. I want to
So
get through
just
analytics
so
and
1
start the
minute
next
entries,
series
that's-
today as well.
That's
Possibly get
good.
through two chunks of videos
So this
today.
trade specifically, we've got
So
15.
don't mind, but I am going to
which is
talk
right
over
there,
the
so you
video.
entered a
And if
short here.
we miss
So
something
talk me
critical,
through the
or you
decision
guys
on
really
this
need
one
me to
trade
rewind,
that
tell
you
me.
why you would have
Okay.
without moving your screen. So this is kind of the
Yeah. Okay.
Don't move your screen. Don't move the time frame, and
I'm not
show me
touching it.
what you're seeing right now in this
Yeah.
time frame.
In that time frame, I saw
So this I will pause before he continues on. I mean, this is very, very straightforward. At this point, I don't think there's any surprise here. You've got a 15-minute level here, holding it down. So you're looking for your aggregated 15-minute levels, right? Like, you've got a 15-minute level here. This is the one that tests. You've got this right here, which becomes a test right here, and also a reverse level for the future. So once it breaks through this candle here. So as always, when you guys are breaking down moves, you're always moving from greediest point time frame to the next greediest point time frame. So reverse levels are coming up soon. Like, if I were to show you the butterfly effect list, it's less than 73, 74, 75, and we're getting 70. I believe we're getting 70 and 71 today. Anyways, they're all done and uploaded on YouTube, which is good. So you guys will get there soon. But basically, I'll just do a quick TLDR for everybody on reverse levels. If a level gets wicked through, it can act as support or resistance in the future. Now, there's more to it than that. Obviously, there's 3 full videos, which is 20 to 30 minutes each. So you can go learn the intricacies of it there. But just for this example, a reverse level is something that once it wicks through, it can be created as a ladder point in the future. So if you have a hold level, like right here on the 15, right? This one didn't really wick through it. This kind of respected it. So then you would move down to this level here, which is a greedier level from here. So this one would be tested first. And then this one here as a reverse level here. It's kind of hard to see as I'm trailing with my mouse, but anywho, the point of a reverse level is when you have something like this, right? It tests it, that's fine. That's not a candidate for a reverse level. This right here is being acted as the level, that's fine. And at that point, you're right here in the trade. So this is very straightforward, that if you follow the trail of the time frame, and that's really the key that I'm leading up to here, is you follow the trail of the time frame to find where the move is going to be respected. So what I mean by that is, if we were to look at Bitcoin right now on a daily chart, what we would do is we would say, okay, where's the daily? The daily's right here. The daily was never tested. Instead, the daily gets tested here, which can act as a reverse level in the future. So if you were going to ladder this move, while you might see this as, oh, we're breaking the level, this could create an origin for the future. So that's what I can see here, is that this isn't tested yet. It's a valley on the daily time frame. It could constantly test this over time and create a breakout for the future origin point based on this being a reverse. Because this has been wicked through, that can be the point where it's like, oh my God, we hit a break level. We're breaking the move. Aha, wait a second. There's a reverse level in the way. This can just create a ladder point, which simply ladders off there and creates an elongated trend. So this can act as a reverse level in the future. While you may see this in with a more beginner set of eyes in future of trading, origin level can get created here based off the reverse level. So hitting this reverse level as a short would be a great spot to short, for that reason, that it can create that origin level now. Like, it's setting up its chart to create an origin level. So that's the thing you guys have to look at, like, one step forward. Like, forget analytics for a second. Then, while this is important, this is what we're talking about, but I'm just going to take it to a very advanced point right now, as to where we are trying to understand the events that could possibly happen in the future, to understand what can be respected now. So if you were to look at this trade, you could sit here and say, oh, well, this is very clear to see that this could be an origin level being created right here, right? And this is just one time frame. We're not even working down yet. This is just one time frame. This could easily be an origin level. Well, is there something that could create an origin level? Yes, the reverse test of this level, which is also the ladder point off of this. So accumulation to accumulation could create an interior range if you test that level there, which could be what defines the whatever you want to call this, trends, the range for the future, the flag, whatever you want to call it. It doesn't matter what you call it. And then you can start going down in time frames and seeing, okay, well, what actually got hit here? Aha, 4-hour hold here, but is that actually a 4-hour hold here? So this wasn't hit, this is hit. So this next would be this one here. This is the next level because this right here breaks through. Obviously, you're looking for the next level right there where this is already broken through, but it can act as a reverse to the move. And then at that point, you'd be on the next 4-hour, which is right here, which is where you're getting this right here. And then at the next point, you would be here, which is not tested yet, which could act as the reverse level for the next point. Or this right here being the front side could also act as that same level. So again, we've only broken down 2 time frames very quickly, but just as a quick, crash on reverse levels, when you are wicked through like this, obviously it's not this. So the 1 hour time frame, you can see it's not the 1 hour time frame. However, you can see that that's tested there, which gives you your next point right here, which should be more accurate than that 1 hour level, which it is. 1 hour level here. I don't like that. I like the 4. I don't think the 1 hour is going a bit too deep to expect it to respect the level. So just quick analytics in the moment of a trade, even right now, is something we have to look at, right? Like you can, and you can see it as clear as day here. So you're finding that same time frame relevance, like 15, 15, 15, 15. You guys can see my mouse, yeah. 15. So when this continues to hold, you're simply just recycling the move back down to 15, 15. You lose your level, and then you just crush, right? So
I would have looked back, say 5 or 6 candles there, and had a 1 minute.
So that's what, just to put a feather in this, that's what I would have been looking at. I asked Pat what he had saw on this trade in this moment, and so that's what I would be looking at, this trail of 15-minute levels, because this is as clear as day. It's not always as clear as day, but for this move, it was like as clear as day. It's like 15-minute hold levels are recycling and compressing themselves down and breaking the move, and you've just got this ladder that's being created off 15-minute hold. So when you see something like that, you could even go here and like let's see if there's 15-minute hold levels here. I haven't looked at Bitcoin for 2 weeks now. I didn't even know what the price was, right? Like, okay, where can we make logical sense of this? Okay, well, we could start here. 15-minute hold level. Can this be the reverse? Okay, good. So that actually we can use that. The reverse gets hit, which means now this can be the reverse for the move. So it could go here next. Never goes there. Okay, well, it's not the 15-minute level. That's pretty clear, right? So that's easy to see. It's not the 15-minute level. Start with the hour, the hourly. Usually you work down in time frames, but I'm doing it for this example for this reason. Hourly backside. Could this potentially be it? Yeah, but isn't this also a 4-hour and a daily as well? Yeah, this is like the 4-hour, 1 hour backside combo level. The daily, it can't be. You can always see if it's creating a 12-hour. Okay, so 12-hour, this would be the next 12-hour reverse, or potentially this. No, it's not. It's clearly not the 12-hour. So we can immediately diminish out the 12-hour, even though the 12-hour looks good, feels good, and it's immediately not the 12-hour. 4-hour, like it can't be this. That's obvious. Backside. Nope, it's not the 4-hour. See how easy that can be? Oh, this is being tested. Great. Let's move to the next 4-hour level. So that's the key, right? Is to like, okay, your level here, move to your next level. Go to the hourly level here. Reverse here possible, goes above that. Okay, fine. So it's testing this hourly, which means this one would be next. Yeah, okay, that's good. Test there. So this can be the reverse level after it. Can it go after this next? Oops, backside. So it does go after the backside. So it looks like you're trailing hourly levels here. You see how I found that? Hourly's tested. So you start looking for reverse levels. Here's your level right here. There's a test of this level right here, which means this can be the reverse for the future. It's pretty close. Trail to your next level. These are broken through. And next would actually be here. right? Now you're here in the move. So that's what you just hit. So you can, I'll do that again so people can see the trail of the hourly level with the reverse level. So again, a lot of people won't really be on this page yet, which is okay. I'm just doing analytics right now. So don't worry about being this advanced yet. You'll get there. But I just want to do some quick analytics on levels right now. And when you're getting wicked through levels, like there's always, the point of this is that it was clear to see that this is the 15-minute. And right now it's clear to see that this is the hourly levels holding it back. So again, hourly backside goes to its next level here, test that level, creates a move here, hourly here, which then gives you your next hourly level, regardless if it was wicked through. These are reverse levels that can create ladder points. So this one was wicked through, right? Which is this next, which is right here, right? So this is the whole entire thing. It can be right here, it can be here. Remember, it's any test of the level that was wicked through, which gives you this next, right? Because you're using your next valley. So the way you're going to do this with your eyes, if you were following your eyes, you're going to go straight to the right and you're going to find the next highest time frame valley. So you see the level, go straight to the right, follow it, find the valley, right? This is all part of the same valley on the higher time frame, these two wicks right here. So you're going to trail to the right side. This is all part of the same valley and test of this level. I believe it was this one right here. It's all part of the same valley and test. This is the next greediest level if you follow that trail. You see how he did that? Next greediest level if you follow that trail. Acts as the reverse level. Follow that trail to where it gets tested. Okay, this is it right here. Next greediest level that was within this valley. If this had something else in here, it would be there. Okay, so you follow that trail. Greediest valley right there. The next one would be here, right? And at that point, then you have to go through your time frames and, you know, double check your work. But that's also a 4 hour, which is great. So then you can sit here and say, okay, 4 hour tested, not tested. So you could be here next on the 4. You're not here, you could be here. You could also reset back to up here because this was untested. So this is tested. The next one here is this. This is untested. So here and then here on the larger time frame, right? So you can go here, ladder down, and then you just create these ladder points like here to here to here and so forth. So, okay, let's continue on. So it's going to be way outside of what we're talking about, but that's okay.
So I would have.
You're 15 to 15. Is there a sign
active money
that
going
you will now
in
change to another
because
time
there's
frame?
enough-
Yes, when you can find and confirm the time frame that's being tested.
I would have seen before that well, where did the money go in the longs to come up here? And so I would have looked without touching.
So when you can find the points that are tested, that's the time frame you use, and you go as greedy as it'll let you go.
So these guys here,
exactly.
You're analyzing this. So,
and I'm
so what is it?
Like you go to the bottom side of a move that's already done and you can try to find it as well. Okay, oops. Okay, so just like take the replayer tool, go back to here, try to start finding those reverse levels in here. Our greediest hourly. So greediest, Jesus, why can't I talk? Greediest hourly reverse level is right here. Is there a 15-minute? Confirmations of any of this stuff? $15-minute level. They don't buy it. Let's check the 5-minute. Not clean enough for me. I like things neat, clean, and tidy. That's starting to look decent. So then you'd be right here, would you not? This is holding the move. So then you'd have two components. You could either be right here as the next untested greedy level. It's right there, right? So actually then you'd be here. So this isn't a case of reverse levels. This is a case of finding higher accuracy. Okay, so this could act as a candidate for a reverse level. Not really there to here. Might not be the 5, it might be the 3. 5. So the next one would be this. Trying to find 5-minute untested level. Is there a 3-minute? Look. You have to find the trail, right? Like it's always your job to find that trail. Gonna be nothing here because that's like a whatever 1 minute pump or whatever. This is all gonna fall under the same range. Okay. Could be this. There's something that's pretty clear. This is not tested. It's laddering the move. Is it laddering the move the whole way through? Oh, it's too thick. I can't see anything. Hold on. Could be this. Could be this ladder test. Could be this. Nope, it's not the 3 minute. Wasn't the 3 minute. I would have guessed the 3 minute here. That would have been where I would have placed my order. The 3 minute, because that's pretty clear and concise. So that, oh, wait a second. Didn't see that. It is tested. God damn it. Okay, I messed up. Okay, go to the 1 minute. I could have possibly missed a trade because I just didn't see the right time frame. That's tested right there. So your next one would be here, which is tested right there. Here, which is likely tested. Yeah, okay, so where's the next 1 minute reverse? Be right there. The next greediest one right there. It got completely wicked through. That would be it. That would be reverse level there. Is that what it is? Oh, Jesus, trading view is slow. I would say yes. What did it get through? A few dollars? 710, low 550, 54, 550. Wait, no, Jesus, dude. I gotta zoom in, make sure I'm on the right candle here. Okay, this one. Where's the low? 54, 500. Wait, no, Jesus, what's wrong with me? I've been off too long. 53, 750. Yeah, so $10 away. So that would have been the candle. I mean, it makes sense. 750. You set your order 751, 52, 53. Typically on a lower time frame like this, like in a range, it is going to be those lower time frames. If you zoom out, you can it's within a reasonable amount. It's like 0.01% or 0.005, I guess that would be 0.005, something like that. Yeah. So, I mean, you can see it here. It's the reverse level, but is it something you're going to buy? A greediest point ladders the move. You could just therefore after say like, oh, ladder from here, just stay above this and you hit your move. So if you were going to go like 710, you would have missed it. If you were going to go to the 1 minute reverse, yeah, I mean, if you front ran it enough, you would have got it. It's close enough. Like at this point, if you were going to take 53, 656, you'd be at like 705 or 706. You wouldn't be buying that exact point, like the difference between perspective of how much the value is, right? Like if you were going to go from here to here, like 9%, that's enough to miss the move. Actually, you wouldn't be taking that at 705. You would have missed the trade if you tried to ladder this because you would have been at like, for me personally, I would have been like 81. Yeah, or 4-ish%. That's where I would have put my kind of limiter. Or if I use this one, I would have kind of been around the same thing. 740, I would have been like 756, and you would have just gotten filled, like perfect knife catch type of thing. So, and then you're just using the 1 minutes thereafter. So then you're just using the next 1 minute untested level, which would be right here as your next buy spot, right? Like that would be your next 1 minute. So that's where your trade exists. That's like the greediest point to re-get back in on that trade, which is right there. And then, you know, I don't think we come back down after that. I'm pretty sure this moves just straight up, right? Just move straight up back after that. Yeah, that 1 minute level, or you would have been, you know, the 15 minute holds, back test the 1 minute reverse kind of thing. So you find the trail. That's a really good question. You find the trail. So when you're asking like, well, okay, when do you change to another time frame? You change to another time frame when you can find the trail. And this is a pretty short-lived move. So like, what do you hear within a few days? Like it would be pretty tough to justify using 4-hour candles. Like what do you have here? Like you have 1 4-hour candle that could be a reverse level, and that entry is way too high. Maybe if it was something more like this, where you've got you know, the testing and back testing over and over and over, it's like, yeah, okay, fine. You can use bigger time frames if you're talking about, you know, 2-month time frame. Sure, that's good. That's good to use that 4-hour. Like you see it all the time on these charts where it's like, okay, you can even just go back to here where it's like this. Here's a 4-hour time frame. Here's a reverse level right here. Like the first one we see on the screen. Here's the 4-hour reverse. See how it gets wicked through. Perfect moment, right? And then you would move down to this one here. And that's already tested, so it can't be the candidate for a reverse, but this can, and it's perfect. And so then you would move down to this time frame here, which is tested right here. So that would give you your next reverse right here, or the wick of the move right here. So that, and then that's perfect too, right? So that's like right there. And then this could be the candidate for a reverse. That would be tough. No, at that point you'd have to go into this range here because this was already tested. You see, this can't really be a candidate for a reverse because it was already tested. But when it's blown through, like this one right here in the moment is completely moved through. It ends up being, you know, that level, wick, body, whichever it goes after, ends up being perfect. This one can't. This one here can, but then you'd be here at this level here. And at that point, it just breaks its range because it broke trend. So whether it's used as a reverse level or not, another story. You know, the same thing happened all the way back in these ranges. Like this was testing reverse levels all the way down, just so you guys are aware. This whole entire chart had been systematically, like clockwork, testing 4-hour and reverse 4-hour levels. So test one, bounce, test the next one, bounce. It was like systematically happening. You guys can go and, you know, do exercises to find that, but like systematically this thing had, like, it was almost ridiculous how much like free money was in here. Systematically this thing had been testing these reverse levels like to perfection. It had been happening for the better part of the last year where reverse levels are, you know, tested over and over, and then you're just going up to the next reverse level that's untested. I think it was this one. And like clockwork, this thing had, and it bounced off this in the moment. There was actually like a 7 or an 8% trade off this. And then it continued all throughout here. It continued all throughout here. And like, I've been watching Bitcoin systematically test reverse 4-hour levels for like more than a year now. Like it's ridiculous how much this had been happening here. This one was tested, so it would be this next that holds up the move, and then it would create it as a reverse level, right? See how it creates it as a reverse level and then tests it perfectly, right? Like it was literally systematic. If you know how to find reverse levels, it was like unbelievable. I watched this thing for a year do this, so just, you know, that there's like just one of many that had happened. Again, like it goes through the level that's supposed to hold it, and then it tests it next as its moment of support. Like it was obnoxious how like systematic it was. Okay, let's move on.
What are you thinking when you have, so I want to go to that moment for a second. So you're saying, okay,
Right.
we're looking at longs coming in, we are coming down in price like this to this moment. So what are you thinking about this?
I'm thinking that people like you,
When you're marking these greedy bodies as levels, doesn't matter if they're accumulation or distribution. Yes, of course it does. I was only marking the hold levels. I wasn't marking just random candles.
with the money and the brains,
Maybe it just looks like that because I'm zoomed in. Maybe you guys can't see the screen resolution as well, but I'm only marking hold levels here, proper hold levels, like this on the top, this on the bottom, right? Like maybe you guys just can't see it because of screen resolution because of the thick line, because I'm using such a thick line. But yeah, you can't just mark any candle you want. No, that's not correct.
money off shorts.
I think it just
coming
looks
down
like
those
that because of
three
the
candles
screen resolution.
from about 7,300 to around the 71.
Or I
You
could have been
have
marking it like
re-entered
preemptively for the
longs
next time frame
and
if I did it once
closed
or
those
twice.
shorts. And I'm saying, right, where would those people likely close their longs?
So where do
And
you think they entered?
I would think they entered just above 7,100.
So show me the level. Find the level where you think they entered on your, like you can.
Well,
move
that's a
back in time
15
here.
minute. That's a 15 minute, but there's going to be a 1 minute in here somewhere.
Okay, good. Now,
So I think they'll have jumped up big money in here somewhere, off of some level back here.
Clearly your short was correct here. Like we've picked around the position 1528. Clearly your short is correct. But what I want to see here is I want to see Like, I understand you're saying, okay, we've got a grouping of candles right here that you would have
problem,
been
like
taking
that.
a short off of. So this is in one way correct. There's more to this trade.
Clarity flow, BFE,
What else
help
can
you
you tell
follow the
me
trail.
about why
Yes,
you took
agreed,
your short?
100%.
Right. It certainly would also have been that up here somewhere, there was a series of holes protecting, say, a range around here somewhere.
So show me
And
where that range would have been. Draw a level for me where
in draw a level. It's one of these things here, isn't it?
because there is one level on your screen that is correct here.
Okay. I would have thought the guys might have saw that as the end of the range and got out there somewhere. Something like that. Yeah, you know.
A lot of people got stopped out and used the 52.8 range. 52.8. 52.8. I'm not sure. 52.8. What would you be using at 52.8? I don't even know what I have marked here. Is this a trend? $52.8. This? Like as a weekly level? Sharpie? Is that what we're talking about here? So like this is maybe I'm thinking ahead, but maybe that is a ladder point.
What I'm trying to do there.
Like 52.8 can be a ladder point for the future.
So you're talking
because
about
it goes
an
like
actual level, you're not a
52.880 or
trend.
whatever.
Like, that's what you're-
Yeah,
And then
that would be a
52.8 could be a ladder
target.
point
This
because it's
origin here.
Okay.
And so
52.9.
those long.
So like this as a ladder point on the move. I don't know if I'm following. Maybe just walk me through the logic of what you're trying to do with this move. Because I see 52.8 as the weekly level gets tested, and then I'm thinking maybe you're thinking like this would be a ladder point.
Would have got out there, and I says, well, no, I would have been looking for the 1 minute hold protecting that, and said I'll short there.
Yeah, so that is correct, but you're missing a piece here.
As a ladder
Okay.
point
So
for
what
the
you're
move.
saying is actually correct. So let's talk about that for a second. Your short was great, brilliant short.
Yeah, so that's what you're talking about, right? You're talking about 52.8 being the top of a move, or sorry, 52.950 is the top. 52.8, which is this, could potentially ladder it, right? Like 52.880 could be like a potential ladder point for it. I think that's what you're alluding to. I'm not 100% sure, but I think that's what you mean. Like that, this can create the ladder for the future, and then you get stopped out because it goes up and above. Oh, 59.2. Okay. 59.2. I didn't read that. I read 52.9. Jesus. 6 a.m. stuff. 52.9. So like as a backside? So 52.9 is a backside? I'm not exactly oh god, I'm doing it again. 59.2. Jesus. Okay. I'm just gonna mark 59.2 on the chart. What's wrong with my brain, dude? 59.2. Okay, right here. So you're using 59.2. 59.4. Reverse level. So got reverse level here. There's a perfect example of a reverse level, by the way. Sorry, I snapped it to the wrong candle there. Goes through reverse level. 59.2. I'll just mark 59.2. Yes, you got 59.2. That's not a good candidate because the reverse level is already tested. So that level is already tested, so it's going to go to your lower range right here. So this can't be a ladder point. That's just a technical inaccuracy. Once you have this level, this is it. It's tested right here. right? Like that's it. So 59.2, like you could say 59.420 because it didn't, I mean, this is the same thing, right? Like wicks through, reverse level, acts as a ladder point, right? That's tested, go after the body of the candle, which it did. So then it's like wicks through the body. So you've got two phases to this. You've got the first phase here, which is any test of the level, which can support the move as a ladder point. Wicks through, candidate for reverse. Wicks through, still can be a reverse because this is testing now like this. So this is testing something off of whatever's in here, which is fine. That's not what's important, but wicks through this right here, wicks through, supports the move. So at that point, this one can no longer be the reverse because it's tested, right? Wicks through, test the wick back, ladders the move off of that. So that's very, straightforward to follow. Next point here is that you've got the body of the candle, which could be the possible greedier hold level, longer term ladder. Wicks through, test back, something, I don't know, doesn't quite make it, goes, test the reverse level. At that point, you're just going after your next level. You can't, 59.2 wouldn't be anything here. If 59.2 wouldn't act as anything. I'm assuming you guys are looking here to this and then saying something in here, 59.2. Yeah, no, because look, your 4 hours already tested. It's just going to go straight after your next one, which is right here. And then I believe it went after the daily. A backside, maybe it went after. Come on. 4 hour and then backside. 4 hour here, right? 4 hour perfect touch, and then goes after the backside here. So 4 hour backside reverse, right? Next would be retesting this again. Head and shoulders, the famous head and shoulders. Left shoulder, head, right shoulder. So that's why this doesn't work. What you're talking about 59.2 here, you have to see that once this reverse level is being tested, like it already had been, that was kind of your key here. Test, test. Oh, sorry, wick through, test. Next on the move is here. Wick through, test. Next part of the move is here. Your 4 hour range. So that's why it gets respected so perfectly, because once you lose the reverse level, you go after that 4 hour level, and that's perfect. Now there could just be a greedier part of this 4 hour range. It doesn't necessarily have to be that reverse level. I mean, that's something, you're something you have to do as your job. 1 hour, 4 hour reverse. Level cohesion, same thing within the range. Break of the move can ladder it, which then you can start to get into the hourly reverse. Right here, can this ladder it? Is it tested? Then you have to go into bigger time frames and see what you're actually dealing with. This can't be it right here. It's not possible. Could you possibly have a reverse range in here? Oh, oops. It's right here. I don't like that. No, you can't because it's right there. Test it right there. So then maybe you could go down to here. Maybe. That's a big maybe. That's a big maybe. A lot of the move. Yeah. Anyways, the point being about your question, and it's okay to do this because today's all about analytics and analyzing moves. So I want to teach you guys, current stuff in current time frames, not back when Bitcoin was $6,000. But yeah, the piece that you miss here is that the both parts of this as a reverse level would have been tested. So once this is tested and it moves up, you can't use 59.2. Like 59.2 would be possibly like a ladder point somewhere in here, but yeah, no. The ladder points, they get created off of critical levels if they're there. Like if this 4 hour level, let's pretend this 4 hour level is here. Let's like draw over it. Okay, let's do this. Draw over it and color it the same color. So it's like kind of you understand what I mean. It was like this because it's all these color candles, right? Then if this isn't here, then you have to find your ladder point by other means. But this was the point holding up that range. So this was that point. If this was blue candle doesn't exist here, then you have to find the ladder points where it exists. But in this particular move, this was easy to see that this was the 4 hour, and it's tested and confirmed there, and then confirmed here. So like if you were in this move, there's the replay button here. If you were in this move and you were, right here, you could no longer use 59.2. It's not possible. You could maybe create like an interior trend from here to here, which would give you this to this basically. By the end of things on a different time frame, you would have this and possibly even it'd possibly be this on a different time frame. Like I don't want to dig through information that doesn't matter, but it could possibly be that on a different time frame. And once you lose that trend, that would be the next ladder point of the move. So if this didn't exist, then you could possibly have like something like this. But let me look at your screenshots. Per hour right there. This combination of candles here. Yeah, no, it's the same thing. It's the 59.2. You're talking about like this right here, right? $59.2 down on the 1 hour. So the 1 hour could be here. 58.450. This could be the candidate for a reverse. Losing that 4 hour though. Dang. Let me read your comments. Oh, this is WDs. No, 59.2 range. I long that range. Went to 57.7. That stopped out. I know a lot of people. Range. Here. So you're talking about this right here. Looking at the right date, the 27th. Right here, you're looking at on the 4 hour. So you're looking at this combination of candles right here. Yeah, okay. So what's wrong with this? You backtest this, right? You backtest this. And you're talking about 59.2 being where you stop right here. Immediately, I would be down here at 58.5. So 59.2, I don't think can be correct. Like, if that's the case, your backside is right here. And that acts as a reverse in this move to hold it up, and that's fine, but it goes right through that. So you'd either be at like 59.6 or you'd be down here. So what happens in the move? So you test the hold level, and it goes for a dump. So then where's your position open and close? Dump on the 28th. I use that and along the range got stopped out. Where did you enter the trade? That's the most important thing about this right now. Where did you enter the trade? I had entered 58.4. Like I can understand this. I can understand like this makes sense to enter here. I had entered 58.4, stopped around about 58.1. Okay. Okay that we hit beyond the bottom of the range. Data points tell us is that we're failing at that point. Our ladder becomes something like this. Yeah, I see what you see, W. So the ladder goes here to here to here. Okay, so let's do this. Hourly move tested there. Reverse is tested here and also there in the future. Follow your trail. It's tested here. Follow your trail. So this would be kind of what's in question, or at that point, this level here. Like it's all of this backside range. So now you have to move up in time frame. You got nothing there. A 15-minute backside coincides with the hourly. Then you have 15-minute backside here. Hourly level there. So this would all be the same test. This is all the same test. So this is the backside, hourly level, hourly level. So that's all the same test. So where are you guys entering? I didn't get stopped out at 59.2. You entered at 58.4. Entered here. Yeah, I think that's a reasonable entry. I don't think that's unreasonable. Got stopped out at 57.8. Yeah, I mean, I don't think that's unreasonable. You've got your 4-hour point right here. I mean, the best entry would have been off the ladder of this. Like if you guys are like, I guess the distinction here is that if you're looking for the greediest part of the trade to enter, so there was a misidentification of the greediest part of the trade to enter. Like if you're going back here and you're left with the question of, okay, where am I entering this trade? And you're like, okay, 4 hour here, 1 hour here. Like this, right? 4 hour here, 1 hour here. Where's the greediest part of the trade? Well, it respected the 4 hour to the T. So like you can say you need to be above that. So if you're following the logic trail and saying, okay, the 4 hour, you can be above that. So then the next greediest entry may be this as a backside or the daily. No, it can't be the daily. This is too high because there's pieces under that range. It's not going to be this. Like it can indeed be this, but if you're saying you already have a confirmed test of that 4 hour, like you want to sit there and ladder above it, right? Like it's fine. I'm not sure if it hits this, and it doesn't. So that's not really, it's not really the point. Like you've got a 4 hour confirmed hit, right? So you've got this right here. You've got that 4 hour confirmed. So you want to stay above this, and then it just becomes a, where's that replayer tool? Right here. Points that could be the move. The reverse here is thin, but it's still there. It still makes sense because you can ladder the move, the range. You also have trend, which would have been, make sure there's no daily. There is daily to daily. So that breaks and you back test the range. That's not really important. So you could have trend question mark. That could be a point where you say, okay, well, this can be the greediest part of the move. So you could have entry at 58K. That's one of the greedier points that you missed. 4 hour to, oops, 4 hour, although you have a daily. So like, why would you be using the 4 hour? So I can't justify this lower that way. You have the daily range right there. Like that's as clear as day. So you don't need to be adjusting this. There's something pre-established before that daily happens, possibly? Not really. No. So that would be one of the greedier spots that you guys missed. All this looks like it's doing is setting up the move to break now. That's all this looks like to me. Because if it's not holding this ladder point, it just looks like it's starting to set up the move to attack lower ranges. So if this is going to hold and move this up, you have to find greedier spots. So if you're saying that you want to take a trade, okay, this moment hasn't happened yet. Identify all the spots that could possibly happen, right? You got the 4 hour here. Let's start there. We've got trend, which is kind of like this little interior range. We don't even need this. This was just for an example. So you've got the actual level that gets tested. So we know that's like the bottom of the move. Okay, let's talk about laddering off just like a stupid few dollars, like 57.9. Fine. You've also got trend, and you've also got this as what could be the next ladder point. So I'm just going to float a level like right here. Come on, dude. Like right here. You're just going to float a level 58.162. Okay, so what's the bottom of this? 58.1. So like 120 something, 130. I think 155 is fine. So these would be like the identifiable. If you think it's going up and you want to long this trade, you have to identify all the possibilities of the trade, right? And then you need to be looking at this side of the chart to say, okay, then this is what so remember that strategy video I did. This is, a strategy that I use. So you've identified all the points in the trade. You've got your hourly here at 58.4. You know it can ladder 58.155. It could test the reverse. It could test trend. So when you're creating a strategy, saying, okay, what do I want to do in this trade, right? First off, if you're taking a long on the higher part of the range, which is this 4 hour, or even 58.4, which is the hourly, which given the amount of time that this trade has existed, I think is pretty fair to say the hourly is a good candidate as well. You need to also look at this side of the chart to see what's going to break it, to confirm that move up. So if you're looking at this side of the chart and you're saying, okay, it has to reach a reverse level somewhere, like it has to reach some kind of reverse level. Is this thing being held down? So find the trail of reverse levels, right? Like you've got that to this one here, which is to there. And I think we trailed it to here. Okay, so then at that point, it would be kind of starting to confirm ladders down, right? Let's start back with that 4. What do you have on the 4? You have 4 hour here. Here, you've got a clear level here. So this is number 1, the most important part of this move. Okay. This is the most important part of this move. You have to not be held down by this because this is going to ladder the move down. And if you're laddering down, it's going to ladder the move down to break the move. Go to the hourly, mark out some potentials there as well. So if you were doing hourly reverse levels, you would be here, you would be here, here, which is the 15-minute, which sits right here as well. So, I mean, if you've got this as the 4 hour, right? You've got this as the 4 hour. This is the hourly on this side. Let's go look at this side. Let's look at a higher time frame for a second. Okay. This was the daily hold. It broke the daily hold level, created a range, lost its range. So this is a pretty key piece of information, right? Just going to do this. I know it's lower time frame. That's fine. This is just to show you that here's the daily level, right? Let's mark this, make it red. This is getting a little encumbered on the screen. So you have to create the logic trail up before it too. You can't just look at this and be like, oh, take the highest risk move. Like that to me looks high risk. But I'll talk about more why. So you have the daily level. You have another daily level down here, which is also important. Weekly levels, what do we have? No hard closes, right? I don't think this as a backside is even reasonable. Everything is down here. So we immediately know there's no weekly. So right now the daily is controlling everything. We know there's nothing here on the weekly. These are just 3 straight up candles. The backside is at 52.9. This is not anything that we need to even concern ourselves with what you guys are talking about in the trade. Daily level right here. Hard close and break above it. We have trend, the weekly trend. Fail that weekly trend. There's your test of the daily. If you fail this daily, you need to start thinking about this range down here at 57.8. Okay, so now you need to think about, okay, laddering this part of the range. So then let's go back to our 4 hour where you guys were. So now we know that we need to start thinking about this or this reverse level right here, because that's your daily. Like we need to delete that. Now we know. So this is your daily range that can ladder the move, which it does. You can see this test ladders to here. So now you need to start thinking about the 4 hour reverse levels. Okay, fine. You may have missed this one. That's fine. That's not the point of the move. The architecture of the move is telling you like, okay, fine. That reverse level's tested. This one is next. This can hold up the range of the move. That reverse level is tested there, creates trend. So like this thing should be moving up. If you think this thing is going to be moving up now, this would be the architecture that supports the move up. You have all your case and cause for what could happen in this move. Now you've got the daily level. The daily's hard closed. Fine. Maybe it creates a ladder point. And you could even go like this if you wanted to create the range on the lower time frame. I'm sure it's going to be something like this on the hourly. We could just float it to there, kind of guess. Daily is broken. It's hard closed, but okay, fine. Maybe as a final point, it creates the range. Because if all this breaks and you've got your 4 hour tested, you know it's going down here, which your guys' move is happening after that. So that's fine. We need to understand the architecture of why this move is going where it's going. That's fine. And you do that by justifying this. So now we know as of this moment, hey, this may not be going up anymore. We've actually broken the level back. We've created, like, what does this look like? This looks like it's just going to start testing reverse levels to move up, right? Like, oh, you've already broken over the interior valley, right? Like the break levels on the smaller time frames, you've already broken over. You're starting to back test this part of the range here. So now you need to start saying like, okay, well, where can this thing go? Because like, even if it goes all the way to like 56, like let's call it 57.052, this is still laddering the move. So where could your greedy points be? Right? So there should be no shock that this tests this when your chart looks like this, like it's moving up at this rate. Like this should be no shock. So I think it's a misidentification of what like even right now, this looks like it's about to set a move up. Like, whatever. Trend, ladder in a very basic sense. Trend, ladder. Flip it back over, go to your 4 hour chart, your 1 hour chart, what you guys were looking at. And it doesn't surprise me that this is breaking down to a greedier level. And I think the misidentification here is that about 3 weeks ago, this episode would have been on the 2nd, I believe, of the month, where we talked about the greediest move that breaks a point up can also be the greediest move, or sorry, the point that breaks a move up as the final point on one side can also be polarity that supports it on the other side. And so that's simply what we're seeing here. And after dissecting this and breaking it down at a first glance from October 16th, what I knew, it needed to test it daily. And then we found the origin level and it used that to support the move. So, it's not always going to go after that point. Sometimes it's going to be the 4-hour here that holds it up. And it was in this moment. And when that doesn't hold it up, it simply goes after that. So now it's very clear and easy to see where the trail of this move exists. Like you had your 4-hour here, it gets tested perfectly. You made money on it. It went after the origin level, the greediest point that can hold up the move, that can respect the range. And now it has its trend. So could it have held that hourly at 58.4? Sure. Yep, absolutely. But to take that trade and then think it's a mistake, you need it to be greedier, but it's not always the case. So, seeking ultimate perfection is it's important, but you can't hold that as your standard of existence. You can't just say like, oh, if I don't get every trade perfect, because there's going to be times when you're using technically smart levels. The technical analysis wise, it's a smart level. And then even like maybe right here, and I even said it, I would have gotten liquidated playing this trend. And it would have been like, oh my God, I got liquidated and moved up 8% after because I just missed the move because I was being dumb. And I would have got liquidated too. And I would have played trend and I would have possibly missed this. Or maybe I would have spent time and found this and said like, oh, this is even greedier than trend. Why don't I go after this? Or on the other side, I could have been like this and said, okay, I'm going to go after this because it can ladder the move. So I'm going to go after like, I don't know, maybe I just justified this. Maybe I justified this as like an hourly backset. I don't know. Maybe the whole point of it was like, here's the range that needs to hold. I'm gonna ladder above it. And maybe I missed this move by like $50 and then it moves up 8%. So it's like a pretty fine balance, right? So yeah, like it can be achieved, but you guys shouldn't hold yourself to the coals. If you slightly miss a move, liquidated here and there, like that's part of the game. That's part of trading, is to sometimes face liquidations. That's part of what we do. Is like you're going to have ups and downs, but you want to have 7 or 8 or 9 ups for every 1 or 2 downs. But that's part of it. So that's important to just talk about, that you guys are aiming for extreme perfection. You can get there, but it's a long road. Imagine if you were perfect 100% of the time, you'd turn 10,000 into 5 million in months, right? Turning 10,000 into 500,000 over the course of a year with not optimal perfection is still a very, very good result. So I think that's just important to put that out there, talk about that. Sometimes you will lose trades and it's going to feel bad, but the best thing you can do is just go back and dissect the trade, understand what happened, and use that tool going forward, right? That's the best thing you can do. And that's it.
They've hit the top of the range. So the short actually is a great short. And so what you're seeing here is you're looking at contract flow from down here to this range here, just saying, okay, there's a little scalp in here. There's a little bit more information that you're missing here. So
okay. Here, let me turn my camera off. It's kind of in the way here.
Where you enter your short is, you have it correct in that this is going to have some type of range that it represents. But what you're not getting is that there is a hold level right here. Like this represents that part of the range right there. So you are going to have that same grouping.
So I was right. It was a 15-minute that I was using in this.
15-minute count. Your theory is correct. It's just that you're outlook,
I don't know why it's correct.
You're overseeing on the move. You're missing the larger piece, which is telling you that this leg isn't being attacked, which means all of these break levels in here are not being hit. So theoretically, if we are sitting in this move and this level right here continues to hold us back, there's a hold level here protecting the entirety of the move, which just means long term. Tell me, what does that mean long term?
Well, if that inverse level away over at the beginning of the night at midnight, if that's protecting it, then you're in for long-term distribution.
Right,
you're laddering down.
Right, exactly. You're laddering down. So you're going to have a piece of the ladder here, which in theory would have been hitting a hold level somewhere in the past there. And then you actually...
Yeah, so there's a good point. Most important is you have the balls to put your order on the book, MD. There's a good point to be made there. And it's not that, But I've seen a lot of people, what they do is instead of picking up the pieces quickly and moving forward in the trade to move on, it's like, okay, I see this all the time. Zoom into a time frame here. Let's just pretend these are like whatever 1 minute candles. Somebody shorts here because I think it's moving down. They get panicked. They miss their trade on this candle. They get panicked. They see this happen here. So they short somewhere here thinking it's going to move down. No logic, just FOMO, fear of missing out. It breaks up. They get their first liquidation. Then they short here, their original level. So they're in 2 trades, lost 1 already. It breaks up again. They've lost a trade. Then they short here. They haven't done any technical analysis because they just start getting into this moment of fear of missing out. It breaks up. They get out of their trade, and then they short here again, thinking this is it. It's breaking down, and then they get wrecked. And they've, in a course of 10 minutes, they've lost like 4 or 5 trades. This is haphazard. This is like balls to the walls. You're just clicking buttons and you're losing and bleeding money. We've all done it. I've done it. You've done it. We've all done that because you're so convinced that it's going to short. Now, you should, if you miss a trade, the point here is like you shouldn't get back in right away. Like you miss a trade, walk away. No, that's not true. If you miss a trade and you try to go short here, you should try to understand and use logic and just say, okay, I missed the trade. I need to get back in and take the next trade. Maybe you should have been longing. And if you've seen that this ladder to move from here to here, maybe it would have made sense to actually long this 1 minute hold level and move up and ride that up. It's like, okay, I wanted to short here. This shows me that I should be longing, and instead I'm going to long. This is logically using that same pattern that you just did. Like you need to have the balls to trade, right? Like that's a good way to put it. You need to have the courage to trade. Let's use that word. You need to have the courage to trade. So if you wanted to short here and you missed it and you just kept trying to go through this train of taking moves and it's like, oh my God, I just blew through like 400% because I just did 100x and I just, destroyed myself when I could have done was simply long. A lot of people, the takeaway for them will be, oh, I need to step away from trading. No, that's not true. You need to discern or identify the difference between trading with logic on this side versus emotion on this side, system 1 and system 2. A lot of what I've been talking about lately. You shouldn't walk away because you missed a trade. You should sit there and say, okay, what's next? And use your logic to say, oh, look, this laddered from here to here. I'm trying to short. And instead of trying to short, and they just keep moving up and you're like, I misidentified that whole move. And it becomes this thing where you're like, oh, I just need to walk away. No, don't walk away. Separate emotion from logic and use logic to make your next trade, because you shouldn't be walking away from trades. Like when this happened to you, instead of, this move breaking down and you just walk away from the trade, like it's okay that you lost money here, but like what's wrong with taking this part of the trade and moving up with it, even if it's halfway through? And if you lost, 60% on this move on a trade, what's wrong with taking 400% and only half of this move, which would have probably happened within a few minutes, I'm assuming. Yeah, like what would have been wrong with identifying this hold level and taking it after it, what would have been wrong with, oh, you got liquidated this way, 30 minutes later, you could have taken that level, and how much can you make here? Even if you were to just play this range to this range. I'll snap it over here. It's 200%. So you lost 60 and you made 200, you netted 140 on a wrong trade. As opposed to, well, maybe you even wrote it to the top if you're like a G, you're really good. Maybe you just held and you saw just kind of starting to dwindle down here. So you took 3%. So you made 250 or 260 or 240% after losing 60% or something. Instead of, oh, short, I reshort. That's acting on just quick emotions that are running fast, and you're taking a trade. You're not really using logic. You're just looking at the direction of the candle and you're saying, oh, I need to be in this before it goes too far because I don't want it to miss me. Make that distinction between logic and emotion, because I see this a lot. I see people, stuff like this happens and they just start trying to short instead of like they long, and they just start trying to short because it's going in that direction. It's so fast. They're just like, oh my God, I don't want to miss another move. Just like slow down, mark levels, use logic, take another trade right away with logic. Because like if you had done the work to see this, you would have had the perfect trade. You would have seen it bounced off. And then you could have even gone like this and said, okay, we're in 1 minute time frames. Is there a hold level somewhere? Yeah, let's play the first hold level. Holy shit, look at this. Oh my God, dude. A few minutes later, you're up 200%. Like 1, 2, 3, 4, 5, 6, 7 minutes, you're up 200%. You just sell the ladder point. You could even just sell like right here when it flattens out. And you could just use logic instead of like, oh, I got liquidated, walk away, or trying to just use emotion because it's moving in that direction. Just slow down. Every minute is valuable. Realize that, use logic, and continue to trade. Because there's moves like this that happen all the time, and it's just like free money sitting on the table. It's the first hold level. So buy it. Like, it's the first hold level. Like, buy the goddamn thing. It just hit a critical level. You didn't get the critical level, so what? Buy the first hold level. Dude, that's perfect. And it's just like, it's holding and it's about to create another hold level. So just buy the next candle, man, please. And then you could just make double what you lost anyways. And it wouldn't matter because you just walk away with plus money in your account. Like, FOMO is a bad thing. Logic and emotion, it's why I'm focusing so much on it right now. And there's going to be a lot of different kind of, I was going to say lotion. Yeah, I got a cotton candy lotion coming out in the shop. No, it's for sweaty palms and weak hands. Make those paper hands moist. It's logic and emotion using, I know, sorry guys. It's guys and gals. It's just using logic, and I'm going to have a lot more higher end mental analysis content coming out soon, because I know I gotta get away from this lotion comment. It's going to kill me all day. Because the emotions in the chart are real, right? And I just want to point that out, that you know, like, it feels like there's a focus on this level today, and this is what a lot of traders do. And I'm not saying you guys are doing it. I'm saying I am focusing on this level right now. But this is like a bad thing we get into, is this over hyper analyzation. Like, just move on, man. It's like a bad card of hands. Like, you could be in a poker tournament as the chip leader. You could get knocked out to second place and still be a commanding monster in the tournament. But then you just let your tournament life go to waste because you just so focused on the one bad hand you played and lost your first place stack. You're still second place with a massive stack, and you're still going to like probably win. But then you just like have a meltdown because you played one bad hand and you lost 10% of your chips. So the other 90% just like quickly goes away because you're just melting down over 10%. Like, yeah, it happens. Like, it happens. Misidentified the move happens. Like, the piece that broke out the move is the piece that supported the move. Straightforward, understand why, move on, right? So just to put some, you know, value on that, because it is really important. And I see a lot of people doing what I'm talking about today. Is like, I see a lot of people doing that. They get one bad trade and all of a sudden it's just off the rails through emotion, instead of, you know, taking the next part of that move through logic.
This candle here create the hold level for the next grouping. So what you can see on your screen without even seeing it is that you've already created a ladder down. So where you're seeing,
like
oh,
this.
okay, great. We have 1 minute groupings in here, and these do become the correct moment to interact with. So you're short. The actual entry and what you based your entry price on was correct, but there's a greater piece to be seen here, because if you go to the 1 hour for me,
do you know I am wrong though, because it scares me a bit more. I didn't see all of this, and you know,
yeah,
if this had been just like these, I still would have shorted, and maybe it just would have broke right through.
Exactly. So that's why you're missing that larger piece here, because you can already tell there's a ladder forming.
That's important.
So if we go to that same timestamp, we can see the ladder on our screen without even knowing it's there, right? Like, we can tell just by which hold levels were being hit. We can tell. So your grouping, I believe, looks like it was right in there somewhere.
Let me see. It was 9.
I believe it's right here in this area here.
Yeah, and you can see the ladder from back here. Right.
Yeah. You can see it establishing here, here to here to here, right? Like, so you can see this without even going to the 1 hour time frame. So when we were on the 15-minute time frame, we weren't able to see this side of the screen. We simply couldn't see it. But what we can see is that there is a ladder being tested somewhere. So just as an immediate look on that move, when we see what's those 15-minute charts, right? People have a bit of a problem, okay? And this is the problem. They work from the middle of the charts and out. Okay, so they work like this. It's think of this as a loaf of bread, and they cut the bread right through the middle. So what you're doing is you're working from the middle of your charts outwards. In reality, we need to work from top down or from bottom up.
That's what we did today,
right?
by the way.
Work from the
looking at the bigger events.
Too many people
instead of
do exactly like what you just did.
getting too interior.
Okay, I've got this position right here, right? And I see this hold level here.
Justified what was happening.
This is working from the middle of a chart. Okay, so this is
More
what
of the meta of the market,
99.9% of people will
the
do.
events that happen.
However, if we work from the top down, if we go back to that 15-minute time frame for a second there and find that same moment.
There's kind of this stuff happens in a bell curve, MD, like this. This is important to realize too. Levels get attacked in a bell curve, right? Like you see, we'll go to like a 5-minute time frame here. Like things happen in bell curves in markets. Like there's like this. Things slowly go and then they ramp to their level and then they, you know, go the other way until they like slow down. Like markets happen in bell curves and then they ramp to the other side and then they, you know, slow down. And, you know, this point here, it's like it's hitting a hold level, it's hitting a hold level, it's hitting a hold level, it's laddering, it's laddering, and laddering. And then it ramps up and then it hits a hold level and it hits a hold level and it hits a hold level. And it goes like this and then it creates its hold levels and it ramps down. Like things happen in a bell curve. That's like this, like it happens in a bell curve. And so when you're thinking about higher and lower time frames, like you said, 1 hour later, we should have seen what we did. You have small 1-minute moments that create large time frames, or actually a better way to say that would be you have large time frames that in a bell curve in small moments attack a level and then it goes back the other way, right? And then it takes time for that movement to happen. So things happen in a bell curve. That's why you see large time frames get stopped on small time frames. Like this is the larger time frame, but this happens in a small time frame. Like the attack, like the actual bell is represented on large time frames. Like this would be like a 4-hour level. This would be like a 1-minute candle, but there's more movement in a 1-minute candle than there is on a 4-hour level. But then that 4-hour level is the starting of that big movement. Like that's like this, right? Like there's bigger levels in here that end up causing a longer time frame that causes a quick ramp, and that ramp is like the small time frames. So while the biggest time frames on your chart may garnish you the most money top to bottom, the biggest moves happen in the smallest time frames. Hopefully that makes sense. So it's kind of like, you know, you get quick movement in the charts like this on small time frames, which it encompasses most of your up and down movement is these small time frames. But then a big level will offset it. But that big level is like, that's not where all the money is to be made on big levels. The money is to be made on the small time frames because it takes 4 hours to establish a 4-hour level. So like it's a bell curve, right? Where the movement happens on small time frames to attack larger time frames. And then those larger time frames hold and then the small time frames ramp the other way. Hopefully that makes sense. The markets move in a bell curve. That's how they always have been, because the bell curve represents ladder points at the top and bottom of the curve of a bell.
Somewhere in
Right
here,
there.
some here, wasn't it?
Yeah.
And then
so-
also like if you have if you have the curves of the bell on either side, the most time is spent here because that's like creating ladder points. So the most time is spent here in the markets. This is like creating ladder points, creating trends. And then, you know, once that establishes, all that time spent on these ends here, then you get like one candle up, one candle down, one candle up, one candle down. So it's like the small candles that connect the bells. So it's a really interesting way in the way the markets work when you think it's kind of like BE2 stuff in a way. It's just like a different, deeper type of theory, but the markets move in a bell curve where more time is spent at the bell and at the curvature of the bell, and the small movements are what actually makes up the majority of the bell.
So just drag the chart to the middle of the
Not
screen
really
for
like
me
a
bit.
high-end concept or anything, but just more of like understanding ladders in a different way to understand how
So
time
what you
frames
did
work
here is
smarter.
you said, okay, here's my position, and this is the way you justified it and said, okay, well, there's a grouping of candles here, and then maybe
That's why,
it's
like, even
testing
here,
something.
you see like this on the screen right now. This whole thing would be like the top of a bell, right? And then this small movement here, in retrospect, or in hindsight, or in comparatives to the length of these 15-minute candles. Look at how long in time this is versus the size of this one candle, right? It's like the same thing. It's like, you know, you could take these 5 candles, which would be possibly a 1-hour candle, or 2 1-hour candles, or a single 4-hour candle if you took all of these, and that encompasses 2 4-hour candles. And this could be like 30 40 4-hour candles, or 10 daily candles and 2 4-hour candles. And the biggest curvature in this bell will be those smaller time frames. The biggest movement after the curvature, sorry, I have to say that clearly. Hopefully that makes sense.
Something
Again,
like
I
that.
don't know
So
how
we're
useful that
working
is for
from
you
the
guys, but for me, as somebody who teaches and reverse engineers this stuff, that's
middle
something I look
outwards.
at.
In reality, before I would even look at this position, I would say, okay, I'm here right now.
Yeah, that's a good way to put it. Of course it does. I meant staying on the 1 to 3 minute looking for trades and FOMO without understanding bigger picture. But the good thing about this, MD, is you're right. But you're right in the way that it can be not FOMO, because if you understand that the bell curve just got hit and you're on like a 1 minute chart here, it's not like you can use that to your advantage. And that word FOMO is like, okay, well, there's two types of FOMO. There's FOMO with logic, like you fear of missing like here's a good example. It's like, okay, sure, backside here, too high. Level right here, missed it. Okay, fine. Go to the next level. Just go to like, whatever. This like 1 minute level right here. Hold level, sure, whatever. Go to like any hold level. Let's go to the very first one. Go to this one here. It's like, okay, the bell is going to be created on the 4-hour test, right? So that bell curve gets created on that 4-hour test. That 4-hour test, it's like you use the bigger time frames, right? But you can use FOMO on the smaller time frames if you understood that this was the 4-hour level of polarity. So if you know that this is the most extreme point that's going to hold the move up, then you can use this level as FOMO, in a good type of FOMO, because you know it's going to get hit because you're using logic, because that bell curve just pulled you down. That bell curve got represented on the larger time frame, and then you can use FOMO in a good way. So it's not, you're right. You mean staying on 1 to 3 minute time frames, FOMO without understanding. Right. So that would be like this or nothing, saying like, oh, this or I don't get the trade. That would be FOMOing without understanding. This, though, would be like, oh, there's multiple supports. This is FOMO with understanding based on the bell curve, right? So there's like two types of FOMO. There's the wrong FOMO based on emotion, that you just do something because. But if we were to use this level, saying that, okay, well, this level could be tested anywhere, acts as a ladder point. So this is actually not usable as a hold level. So you can't use this, because this is actually what's going to suppress the move down as the ladder point for the range. Like this will create, and eventually it will end up creating this, which is what needs to break the range. So you can't go above this, which means you can't use this level to test. So you could possibly use the next candle, which would have been your first level. Or if you wanted to wait till there's a confirmed hold level, you could use this one. And it's a little higher, but it's a little safer because it's actually confirming the ladder is moving up. And now you have this on the bottom side, which can also confirm like a range. So that this is like kind of perfect, right? So then, you rewind back this. This is a good FOMO. This is FOMO with logic. FOMO with emotion is just saying like, oh, it's moving down, I better get in before it moves down again. There's no hold levels. It breaks here or nothing. But how can it be this candle if this is defining the range, right? Because it happens so fast, it also defines the range. So you go one candle, you're like, oh, I'm not getting in a trade because my trade is right here. So fuck it. This is my level and nothing else. So, well, in actuality, it can be here, right? So you're sitting here and you're like, this or nothing. All of a sudden it moves up. Next, you didn't take your trade there. So like you missed this, and it's like, oh, okay, wait a second. We just created a range on this move. Oh, damn, I can use this. It can hold this trend, so I can go after trend or level. Damn it, trend respected. Can I get back in on trend again? Yes, I got in on trend. Okay, it didn't go after trade, or I got in on the level. Yes, it didn't go after trend. I didn't even take the trade. Okay. If it breaks over this, I have to take this trade because at least I could ride this from here to here. So now you're just using multiple layers of logic to make money, where you lost 60% on one side and made, even if it was 128%, because you just wanted to double your money. You didn't even have to take the full thing out, and you create the hold level and you're like, okay, God, this is so perfect. I got entry. This is FOMO good. So there's FOMO good, there's FOMO bad. FOMO bad is emotion FOMO. FOMO good is logic FOMO. And logic FOMO can be seen by understanding of the 4-hour level, polarity. This is the bell curve that's creating, like it has nothing to do with the bell curve actually, but the bell curve works as to where the smaller candles attack the bigger time frames, and the bigger time frames create the offset on the bell. So now, if the bell curve is true, then it's got to be like this, and this has got to kind of go like this, and then this has to create a bell curve down to here. And if this can hold, it'll go up to here. But in this case, it's like, okay, the bell curve is like this. It's like, okay, now we got this here. And so that's the bell curve down to there. And then this bell curve goes up to here. And so we're going to hit some kind of ladder point, and that's like this. And this bell curve is here. So if this one holds, guess where we're going? This is going to bell curve back up to here. And then if this one holds, guess where we're going? Then now your Pandora's box between two levels. And then you just hit play and you can see how it, what happens. Didn't even hit the hold level, did we? Laddered off of it. Okay, this is looking good. We didn't even hit our hold level. We're here now, possibly here, reverse hold. Okay, it's a little greedier. You know what? Screw it. Let's go like this. Go there. We hit it? Can we hit it? No, you just break up and over. So that's like understanding the bell curve with FOMO can, like, if you understand the way a market moves and how a bell curve works against levels and trends and compression, polarity, ranges, and where the bell curve can create points, you can kind of start to see polarity, right? Like markets work in bell curves, and then it can create certain types of movement as you can good FOMO versus bad FOMO, right? So hopefully this helps because this is like pretty important. Miss a trade because I got front run, then FOMO with logic hold on lower time frames, and I get in. I like that. Yeah, because you don't have to always get in at this moment. Like this is hard to see, but it's also like, again, just go back to what we talked about at the beginning of the month. What breaks the move, which in this case was an origin, is what creates the polarity on the other side. And that's what happened, and you missed it, but you can still FOMO in. Good. Doesn't mean you have to, but visualizing a bell curve can help you understand ranges better as well. Definitely add it to my baggage. I use these moves, but hard to catch in execution. So like catching this moment is like being the best trader in the world. Like these are kind of like the crazy moments. Like I catch a lot of these moments, and I'm not saying I'm the best trader in the world, but I'm pretty damn good at what I do. So catching this is like being a god. If you could do this all the time, like you turn 10,000 into 5 million, and then you would turn 5 million into 100. Like you would be just infinitely rich if you could always catch these. But that's not to say you can't play these moves, which are like really easy to see, and turn 10K into 500K per year. And then, 50K into $1 million a year and make a very, very good income otherwise, right? You should hear some stuff, Orca. I think it's just you. Me reading the bell curve. Yeah, just realize that like 90% of the motion happens in the small candles, and then the bell curve exists, and there's good FOMO and bad FOMO. So that's really important with understanding analytics, and what we're talking about today is like you can't don't walk away from your charts completely. Like it's good to have kind of an attitude. Like I show people on stream that my attitude is like, I don't care if I miss a move. That's fine, but don't just default to that. There's a balance between not caring if you miss a move, but taking the next smart, appropriate levels.
Which means I have to understand what's happening here. So we have to work from the top back, right? This will give you more clarity in your trade. So you're saying, okay, there's without even drawing any lines on the screen. The first things I see is like this. Okay, I see. Oh, I look at this candle here. Sorry, let me make that a bit clearer. I look at this candle right here. These two candles right there, and I say, oh, they were testing a hold from somewhere else. Which means if we're in this moment, I need to take my eyes and look right here and say, oh, we're laddering from here to here currently. By working from the top downwards to the middle to bring us to our position, we already know we're laddering down. We don't have to take a guess. We don't have to sit here and wonder, oh, are we going to move up? Are we going to break hold levels? You waste a lot of time, and you waste a lot of your gas in your tank on a daily basis by taking your position in that moment and saying, what am I looking at? Because there's a huge cloud over all of this. If you do that, you'll be blindsided by moves. So what's going to happen is you're going to enter a short, and
Charlotte, you asked if a bell curve would be the same as an S curve. No. A bell curve is like on a measurement of 100%. Like I think you can Google this anyways. Bell curve would be like, this would be encompassed of like 90% right here. And then the curve of the bell would be 10%, right? And then this would be the next 90%. And then this would be the next 10%. An S curve would be more like 70-30. Like an S curve like that is more like 70-30, as to where 70% of the motion happens on one axis, and then it curves on a 30% rotation. So it's like 70-30, 70-30, 70-30. I could be wrong about bell curve and S curves. I know bell curves is like that. The exact math, I don't know. I'm assuming it's 70-30. I'm guessing based on just looking at how an S curve works. It's like a 70-30, or a S curve could be even 50-50. Like an S curve can be something where it's actually equal. So an S curve is more, I guess an S curve can be variable, as to where a bell curve is just, everything happens down here, and then, the amount of motion here, like over time. Like, okay, measure it from here, like October from this point to this point. Like a bell curve happens like this. If you were to bell curve, it would be like this. Look at all the time it takes to complete the curve. And then from this point here, it goes like that. So the measurement of this point to this point hits here to here, right? So you're only talking about from 9:45 to 10:45, 1 hour, as opposed to what creates that bell. You've got October 27th to October. This is 48 hours, right? This is 48 hours. This is 1 hour. So it's like a very different distribution of the way that the time in the charts work. So it's just for anybody who doesn't know. Okay, let's continue on.
You're not going to see that it's actually setting up a break for a move, right?
Yes.
So by working from
how do we also feel about doing a bonus session tomorrow morning?
Slice it from the middle. you're going to have a tough time.
Doing another
you work from either
2 or
side,
3 hour
right?
stream
You'll
tomorrow
start
morning
busting, work your way to
at
the
the same time, 6
So
a.m.
the first thing I see here is I look at this one blue candle.
I want to
and
catch
say,
up for missing
"Oh,
last
that's
week, and
testing
I'm
the
not
whole
getting
level,
through enough
which
today.
means this
Although
is
we're
testing
doing
the
great
whole
work
level,
today,
which means there's something here that's happening. So I
it would
already
be.
know that
I
we are
think it
just
would be
laddering
fun
it
to
up.
do another session
it's
tomorrow
Because,
morning.
and you go back in the same time frame to the highest point of this present range.
Yeah, like,
That's the start. That's the
Everybody's
start.
in,
Because, you know,
and it'll be
there
up for
could be,
replay
if
in
I
case
went
you
to the
don't,
hour,
in case you
there's
can't
down-
make it and
there's
you
something
miss
up
it.
there at 8,000
Oh
way
boy.
back.
yeah, and
It'll
so
be
I'm
up for
just gonna
people
take a random spot
to
here
watch
and
anyways on a
we'll just
replay.
go to Bitcoin.
Even if you can't make it. So no worries if you can't make it, and I'll try to have them
You know,
replays
let's
all
even
up
do
tomorrow
something
night
else.
if
Let's just go
possible. If not, I'll get
I
it
don't
for
care
Monday
like
for
at
us.
all. Let's delete whatever we have.
Okay,
Just
so
gonna
tomorrow,
select
confirm,
random
6 a.m.
spot, turn the replayer tool on and go here. Take a look at this thing and work.
We might do a
from
few weekends like
the
this where we do
top out,
back-to-back
right?
sessions
So
on the
I'm just
weekends,
gonna
like
work from the
Saturday,
top
Sunday,
out.
because I do want to get through Butterfly Effect 1. So
If
we
you
might
rotate
do a
this
few
and
weekends
say,
like this
okay,
just to, tell people. I haven't
we could
decided
start
yet, but
working
I
from
want to get
here,
through it.
for example, and you can see my screen. Okay, yeah.
Yeah,
Keep
sure.
that bell curve
Okay,
up.
we could start working from here and saying, okay, we
Okay,
hit a
then
break
yeah,
level
it's
there,
confirmed. Tomorrow, 6 a.m.
which means we're going to go after this whole level here, which means we might be targeting something back here. We're not going to see the bigger
P2
part of the
before
movements
BE1.
happening. Instead, you know how my flow of visual cues works. What I do is I go like this. Okay, this was clearly testing something right here. So what I do is I immediately do this and say, what was this testing? It was testing.
That's kind of what we
inverse-
did today.
Come on.
Try to understand what
Testing.
something's
Just go
testing to
my
create a
highest point and
baseline
go
of
down and say,
understanding.
oh, we were testing an inverse level on that side. And I can already see we've moved up off this hold, which means we're laddering up. We've moved off whatever this hold is here, this back, come on, this backside right there. We've moved off of, which means currently we're in this segment of the move right here, the backside of this, come on, the backside of this, we've moved up off
Litecoin.
of.
Geez, that's
So
something
I am
haven't charted in
working
a long time.
outwards in, right? Because it gives me a better understanding of what's happening. By doing that, I can.
Yes, Richard, we're going to do another 6 a.m. tomorrow.
Okay,
Bonus session.
here is our target up here, which means this had tested this range already. So we have a tested inverse, which means we are going to be looking at this level here, which is pretty much already tested. So really your target becomes this backside right here. Come on, trading view. Let's go. Oh boy, we might be here for a while.
Long lesson.
There we go.
Magnet tool.
Two strikes again.
Yeah. So I can even
Magnet
just
tool
delete
kills
this,
me.
and I've worked from the top out because I know that we've already tested inverses.
So what I'm doing here is I'm creating kind of a baseline of understanding, just like I did when with these charts. Like I always kind of, one of the key things that I do is that I always try to just take a chart. Let's go to a random stock chart. Let's go to the S&P. I just try to take a chart, okay? And I try to create a baseline of understanding. I just try to start to visualize what I can see happening. Oh man, look at this S&P chart. It's popped off. I didn't even see what happened. So even right now, I would just try to create a baseline of what is happening. I would just first glance, and I would probably just go to a higher time frame to start and say, okay, well, you've got a daily here. Yeah, you're breaking over this range pretty well. You've got a daily here. Just take a look and try to visually create some baselines. Like I think this is a really good exercise for people to do. Just create some baselines, even if it's not, technically the deepest dive yet. Just create some baselines. So this is what the polarity of the move, what held it, had supported it. So now it's already tested that level and moved up. So I think this as a reverse would work. No, I don't like it. Honestly, I don't like it. I think this has to hold the move up and it has to close higher time frames now. So yeah, if you continue to support this, so this would be like my level. Like if you continue to support this, you're gonna ramp, right? So like, and then I would go to a weekly here and just make sure I didn't miss anything. Yeah, okay, you know what? We can add a weekly backside. I don't really think it's important, to be honest. I think at that point you'd break trend. So I know the weekly backside is not going to be usable just because you'd break trend at that point. What breaks the move can hold it. This was the origin. Yeah, you could deep dive the range and hit trend and then move up. So if I was going to take a trade, it might be like this right here. So there might be a level inside of here somewhere. No. 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 Question mark, yes. There we go. Easy peasy. Test the range, hold the trend. Ladder above this. Back over top of it by testing the trend. So hit it. You could actually even test this. So 2 levels. But it already went through it. So how can it be, right? Like it already tested it. So how can it be that? It can't. So then you actually have to move it to here. 2 levels in the charts. Just try to get a baseline understanding. Like you don't have to go through all your time frames, but at least try to get, and I've just worked this little section right here. That's all I've done is just worked this to see what it happens. You know, that's working from the middle out, which is not actually, no, working from the middle out would be starting right here. Like the loaf of bread where I say, you know, people work from the middle out, either work from this end or this end. I've decided to work from this end to just understand what's here, like this part of the loaf of bread, or you work from this end. You never work from just inside that range. You can, but you end up missing things. You can use these as trades as long as you work from here and here, right? Like these ends of the charts. So that's just always important. Like it's what I do in all my charts. I always just try to get a baseline understanding, even if I'm just marking a few dummy levels, just something to start my assessment off of, just a baseline.
Going to stop here. So again, I don't know what's happening with Litecoin here. I'm hoping I'm right. You know, we can say this is even tested here. So really the range is already broken here. This is holding it down. But I'm working from the top out to create something. So now
this is a record.
I have
almost 3 hours for a 15-minute video,
or an exit and an entry. And even this, I would say, likely going to break
for 15 minutes in a video,
just because the range is so small given the time frame. Like you've got 4%. So then what I would even say is I would say, okay, this is one target, but then there's another target here. The top of this range here is clearly testing this range in here, which created an origin back here. You've got an origin level right here, right? So you've got 2 levels to work off of by just working.
So 78 can be the latter point, right? Origin.
I'm sure we're gonna
in the future if you break above it.
Yeah, see, there's its first target, right? But we understood that was a target because we simply just worked with this. We worked from the top down because we saw, okay, we're here in the moment, which means we're going after this. What was this going after? This already had tested the inverse, which means we're going to gap from this inverse to this inverse. And I was very quickly able to see that because I'm just working from the top out or the top down and the bottom up, not the middle to see, oh, what's here? Because you would have missed the move, right? And then you can press play again, and I'm sure you go right to this origin.
See how good I am. Oh, hit it. Broke over it.
Right? So you go right to the origin, you hold this, and then you create a moment where you're holding over top of an origin to create a larger breakout, right? So then, here you can even go larger time frame and say, okay, where's the next top piece? Like this is the next top of the range. Breaking over an origin level like this, you're likely going to test this range up in here somewhere. So you've got another origin that looks like to be right here at 104, right? So this is your next target. If you hold this, you're probably going right up to there, right? If you continue to hold this level, and you don't, you actually go down to your next range. But it gives me my exact targets, right? Like it gives me my exact points of where I'm looking to see what's happening, right? And we're going to
let me ask you one question there. That's second highest level that you've drawn now. It's been broken down. So would you delete that now? It's irrelevant.
This one here?
No, the one below it.
This one here.
Yeah.
Oh yeah. This is just an inverse. Once it's tested, once it's gone. Like that's
okay. Yeah, no, just I want to make sure because I'm taking them out. As soon as mine are tested, they're gone. Right.
And then even this origin level was just testing an inverse right here. Right. So it was actually just testing the inverse of this range. And then once you lose this, the move is gone, right? So these are called polarized moments, which is also what we're going to be talking about today. But to start with, and we can do
polarity, I assume, is next then on the list. Good.
I don't know if I have anything. We're just going to pick a random spot in the middle of the chart. This looks good. So theoretically, if we were in this moment right here and we were to work from the top down, right, you would see this right here is clearly testing something from the past. So you have whatever hold levels back here, maybe the front side of the range. This is already a tested level. So really you are looking towards the next set of ranges. This is a little too close, I think. Really you're looking at your ranges, right? Like you working from the bottom up. Okay. So
if it can go there, it will.
Okay, we're just going to kind of slide it this way. So this is tested. So you have kind of an untested range right here, right? So you'd have something in zoom in and actually find it here.
Fast forward this. I think I'll try to locate this level for a little bit here.
Down instead of starting from here and trying to understand, okay, what did we test? Oh, we tested this, which means we could be coming up to here next. you'll garnish more information and a quicker set of knowledge by working from this top down. Again, this is very simple. We hit a backside, we're probably, going to bounce. Just going to watch this, and there's the backside hold again, right?
You got the bounce.
Eventually over time, what you're going to do is you're going to end up just losing this trend right here. Like you're going to have this.
I've lost your share, I think, or have you moved screen?
No, it's still there.
Is it?
And it's going to go right to your next range, right? You'll garnish more information on working from the top down or the bottom up, because you'll miss so much of a move and what it's actually doing. Oh boy, this is taking forever, isn't it? You'll miss so much in a move and what it's actually doing by not working this way. And not only that, is you're gonna burn through fuel in the tank like crazy. Like you're not. It's gonna be very hard to keep that pace. That actually didn't even go down to our target. It actually went right over top of it there. Wow, not bad. Ethereum did pretty well, huh? I suppose it tested this backside, right? Yeah, tested that backside. It tested an even higher
Point that breaks it out can support the move, right? Point that breaks it out can support the move.
backside. Boy, that would have been a nice one to mark. Jesus.
The TA is still right.
Yeah. It stays the same, right? Like it's the same on both sides. This is the backside hold creating the large bounce down. This is the backside hold creating the large bounce up. But regardless of whether we mark the right or wrong levels, it still stays the same as to where you missed the larger part of that moving down. Because I don't actually know when you closed your trade on that. All I looked at was the entry. I'm not sure where you closed your trade, but that should have told you the larger piece of information that's happening, right?
I can tell you all of my trades this week were, the longest trade was less than 6 hours.
Yeah, see, that's a problem because remove this. I'm going to go to where you were. You're 15 minute at 73.
73.21 or 2, something like
I believe
that.
we're right in here. So your entry is roughly
somewhere there.
Like
73.21, wasn't it? Yeah, and it was off of 1 minute.
Yep, great entry. So you would have done something like this, and you would have went to find the greediest levels here. So you would have went and said, oh, okay, maybe you've got the leg of a move right here. So maybe you're targeting the greedy level right here, or possibly the next one down. So maybe something like this is where you were entering. This looks about right. So you're looking here, right? But you're also running a problem here because you've got, and what you're missing here is you're going to have a large, maybe we should do this on the hourly. You're going to have a larger trend working here. So this is something you would have had to be aware of in the moment, right? Like you've got a larger trend working here, and this could have easily bounced off this level right here to break trend. Like that could have easily been set up to do that move, or even supposedly right here. This is tested, so then your range would have been somewhere right here, right? So you could have easily set this to break trend up, because I think everybody was looking at this move. Now it would have been incorrect to look at this move like this. Oh, I guess we didn't hold the weekly. We should be going after the daily. Well, for a very specific reason, and I'm going to show you my order books for a second here. I'm just bringing it up on my other screen, my Binance account here. And am I logged in? I'm not logged in. 1 second, I got to log in here. Takes a moment. They got all the verification and the authentication. So all week I had been, and here's my order book. You guys see that on my screen now?
No. Yep.
So all week I'm with some of the mentees, teaching them, what we're looking at. So you go here in the moment, and on the 0408 here, you can see that all day long, because at first I had one person in the morning here at 7 a.m. and then I had somebody at 10 a.m. and another person at 1500. So all day long, I'm telling everybody 73.88 is target. We're going to go for a huge short. So you can see I'm putting up 31 Bitcoin orders here, saying like, look, guys, max leverage this. It would be smart if you took a short here, or put whatever you want on this at 73.88. The way I ascertain this information is different than the way you ascertain this information. So the way I ascertained this is that I worked from the top down. For example, I can even just delete everything we have here. I don't really need anything here. So back up here. It's fine.
You're on a 3-minute time frame. Do you pick a time frame to start?
No. Don't think of it like that. I'm on a 3-minute
Right.
time frame just because it's what I was on last time I opened my charts.
No worries.
If we look at this here, and you're working from this moment with these candles here. So presumably, we're just going to mark a level here. 73.20 is where you bought. What you wouldn't have saw by trading like this is this. You wouldn't have seen, and I know everybody was waiting to go up after this daily candle right here at 73.99. Like there's a candle right here. Everybody's thinking, oh, we're going after the daily because the weekly didn't hold. So you have the
Pay attention to
weekly
this
back
part.
in this range somewhere around 73.50.
You have a level you're expecting to go after and you don't go after it.
And it's not holding. But the thing is time frame relevant. Okay, first off, time frame relevant. It doesn't need to knife catch it and move away. And we'll talk about that a little later today. But what the point of this is, by working from the top down, this is what you get. You get, okay, I've got a top here, which means this candle here was testing the same level that this candle was. So that's the first key piece of this information. I look at this candle.
First
and
level,
this
if it's
candle
there.
was testing something, and this ended up being a 1 hour hold off of the weekly. So it was just a greedier level within the same weekly range. This candle was testing the same thing. Now I'm looking at this and I say, okay, so they're both testing a hold level, right? So we're just going to leave this here, and even we'll move it to the middle of the screen because we just want to have the understanding.
What is that hold it was testing is what you're after.
Exactly. We just want to know what it was testing. So that when we see this, we're thinking the same thing. We're going through the same trail of logic flow or visual fidelity. We are saying, oh, this tested an inverse, and now this is testing an inverse, right? So then I can just go in here and I can just go to whatever charts here, and I can say, well, what was the greediest level that was testing? So are we like testing an inverse to an inverse here, right? Like what's going on here? What's the greediest level that we're testing? So then you can even go back here and you can find, I'm sure there's some kind of level in here. I suppose we should find it. I don't know. I'm sure we'll see it on the 5-minute chart here. Okay, we got to go forward more. Aha, yes. Go here, and here's a 5-minute level. And where's the greedy part of that range, right? So let's start range defining this and say, okay, well, where's the final valley that holds this down, right? So then we can go here, and we have that same piece. Like it starts right here. Is there anything else, or is this it? Right? Like let's just make sure there's nothing else. Right now, I'm pretty comfortable with that as our level, but let's just make sure there's no greedier points. And there actually is. There is a greedier point, and it starts right here. So this would have been the start of it's all the same level there, like they're the same price. So anyway, suppose we find this and see if it got hit. Oh, look at that. It got hit perfectly. Interesting, right? So we have an inverse from the past, and we have the greediest level off the next inverse. Okay, let's just simply mark this inverse now and see if we can see what's happening. Oh, interesting. We just inversed off of an inverse at 73.90, right? So my buy, where I was telling people buy 73.88, just front run it by $1 or $2, buy right there, short, and so you can see all day 73.88, 73.88, 73.88, all timestamps in the morning, because I was teaching people.
I remember that trade.
Right?
It was a good trade.
When we look back at this and we go to a larger time frame, by working from the top down, we immediately understand what's happening. So you made your decision, which was the right decision, based on information where you're entering here off of something that's happening here. That's fine. But what you didn't see by working from the top down is the very, very clear ladder that was created off of the weekly before a big dump. And then you even have just distribution to distribution trend, which really just ends up being icing on the cake, because then you've just got your distribution to distribution
Yeah,
trend.
perfect trend, touch test level. Don't hard
which
close.
will give you the moments in the future that you need to. So by working from the top down, I don't even have to go into this chart to understand that this thing is dumping in a big way, right? Like I don't even need to. I don't need to start right here in the moment where you're trading and say, oh, what am I looking for? Which is good, but you have to understand that there's a larger piece of information that you're missing that's not going to tell you. So when you
it's part of something bigger,
when you said you've only been in a trade for 6 hours, that's a red flag to me, because that means to me you're not understanding the larger picture of what's happening.
Yes. Yes.
So you might be able to take these amazing entries, but you have no confidence in where they're going to go. So you're almost
Correct.
in bear mode, right? Where it's like, oh, I've made 1%. I need to get out.
Hey,